Hello everybody, welcome again to Future Finance KHF. Today we're gonna be recapping what we spoke about in the last 3 videos. We're gonna go in a little detail as much as we can just to save time, because we need to focus more on how do you do again your search for stock, and what do you do when you find something you are interested in. How do you sort your search to be able to find the one that you are interested in, and how do you read these financial statements, what do you focus on income statement, balance sheet, and so on. So just to recap, so new viewers are able to understand where we're coming from in this video, and how do we reach the conclusion that we getting to it right now. So we need just to give them a little bit of idea. If they haven't watched those 3 videos before, we're gonna go over these 3 videos, these 2 videos very quickly, in order for them to understand, and then they can go on their own and watch them in more details. Okay, so in the first video we talked about the concept and the risk factors. So in order for you to start the stock trading, you have to understand what is the most important factor in this stock trading process. We said that it is the risk factor. The risk factor, you see it right here in the bold words. Okay, risk factor is the most important thing that you need to watch. You cannot cancel the risk factor from the formula, but you can only manage it. How do you manage that risk factor? I advise people who wants to put or write some notes to do so. That might help you if you don't want to go back to watch the video. That might help you to be able to read your notes and know how do you start building on what you're learning in order for you to execute a successful trading. Okay, so the concept and the risk factor, we said you need to set a boundaries in order for you to manage that risk factor, because you cannot cancel it from the formula of doing this business of trading. Okay, so what are these boundaries? First of all, we are short-term investors. Doesn't matter which one you put first or second. Okay, second, buy stocks under $2. The third one, we said buy stock under $2. Start with $2,000 budget. Okay, those 3 elements, they're going to help you manage the risk very professionally, because we think and we believe that stocks that under $2, first of all, they have the highest potential to make money. Second of all, it doesn't need a lot of money to invest, which is less risk for you, and they're easier to manage when you feel that there is a dangerous situation going on and I need to sell my stock because they might fall. Also, we said one of the ways, also buy one stock at a time, because you have a small budget and you don't want to put all your money in one basket. When we get to talking about the strategy, we're going to see that in the second phase of that strategy, when you reach your second goal, you'll be able to do a multiple trading. Okay, so for people who didn't watch the first video, we say you are a short-term investor because you need to be able to make money within a day, weeks. You know, you don't want a stock that will force you to go long term, because that will increase the risk factor. Okay, and we spoke in details about the difference between a long-term investor and a short-term investor. Please go back to the first video and learn about that. The second one, buy stock under $2. We said don't underestimate the less than $2 stocks. You're starting with $2,000 budget, and don't underestimate how much $2,000 can do for you. Stocks that fall below $2 value, they have higher potential to make money. They're considered by most educators that they are riskier stocks because of their financial standing, but that is a job that you're gonna do later when you do your homework and search for these stocks and read their financial statements and try to look for their trends to be able to answer the question that is, it's called a going concern question. But for small investors, the going concerns question doesn't mean that I need to make sure that this stock is going to be there forever, but at least it's going to be there until the time I sell this stock, which is, it's enough for me to make my money and not lose my money. Okay, so that is the question. The going concern question normally is meant to say that this stock is going to be in business for a long time. But for us as a short-term investor, it's enough to be there until I make my profit. Then I don't care what will happen to it after that. Okay, so go back to the first video and go in detail about these four elements that we set in order for us to manage the risk. In the second video, we spoke about the strategies and we set the goals. And based on the first video, like I said, we set the boundaries, and that's why in the second video we use these boundaries in order for us to achieve and draw a map for our strategy. So your strategy is gonna start by trying to make your first 500 daily, or make $500 daily. That's your first goal. You might not achieve it, but that is your goal. So you might make it after 3 days, 4 days. So if you plan to make a $500 a day, that means you're planning to do $10,000 a month. Let's say your plan worked 50% of the time, that means you're gonna gross $5,000. So in 2 months, you made your first $10,000. So when you that's your second goal. Okay, this one we said it's the first goal. The second goal, make your first $10,000. Okay, and trust me, that is very realistic figure. We're not talking about dreams over here. That is very realistic figure. You might actually buy a stock that costs you $500 and make $5,000 out of it in a couple days. So these are realistic figures. These are things that happens every day. All you need to do is which one you have to buy, when do you have to buy it, and when you're going to sell it. The third goal is make $25,000 and keep them in your account. So meaning that your third goal is to keep this minimum of $25,000 in your trading account, because you want to be able to exercise as many trades as you want. Because when you have less than $25,000, the SEC, which is the Security Exchange Commission, they set a rule to say that if you have in your trading account less than $25,000, you can only exercise 3 trades in the same business day. So you can sell and buy 3 times in the same business day. You can buy as many times as you want if you keep them for tomorrow or whatever. But if you want to sell them in the same business day, you can only do 3 trades, buy and sell. That's why when you reach the point where you have $25,000, you will be able to do as many trades as you want in the same business day, and that will actually help you to manage the risk a lot better. Okay, so that will reduce the effect of the risk factor on your daily trading, because you are able to manage this risk a lot better. Okay, so go back to the third video and know more, so you can learn more about that. So to the second video. The second video we spoke about that. So the third video we spoke about how do you start searching for the stock, and when you find these stocks, what do you do? How do you investigate? How do you read their financial statements? How do you make connections between all this data that you're collecting from their financial statements in order for you to come up with a figure or a trend? Is this stock is gonna go up? Is this stock is gonna go down? Or is this stock is gonna be steady for a while before it jumps? And also you're gonna be answering the question, which is the going concern question, which is one of the most important jobs or question that you have to answer when you decide to buy a stock, because you don't want to wake up the next day and see this stock gone and lose all the money that you invested in there. Okay, so let's go in detail talking about how and where do you search for your stock. Okay, so here a website what we spoke about in the third video, but I'm really sorry the third video came out a little unclear or a little not so great because of the way I was videotaping this screen. It came a little little to the left. It was not straight shot. So now we're trying just to help you guys again try to talk about the same subject and kind of help you understand how and where do you look for your stocks. First thing we said, I recommend to use finviz.com. That's the website that's gonna provide all the stocks that you might be interested in. You're gonna find millions of stocks in this website. Now, our search is to look for stocks that under $2, right? So on this screen right here, you'll see all this home, news, screener, maps, groups, portfolio, insider, whatever. What we care about is the one that says screener. It's the third one from the left side. So you're gonna click on that, and then you're gonna come to this page right here, which is a list of hundreds or thousands of stocks. Okay, so we don't want all these stocks, so we're gonna pick the one that are under $2. In the middle right here, you see that they have like features that you can use to sort your stocks. You can, for instance, do it under the market cap. See, you are interested, let's say, in a business that worth over $500 million. So you can do that. So there is a lot of features, right? There's a lot of ways to sort your search. What are we interested in is to pick a stock that is under $2, which is going to be to the far right of the page. Right here, you click on that, you see $2 right there, you pick it, and now everything is listed is under $2. Okay, so the second thing that we need to look for and is very important to us is the volume of the trades. So meaning like how active this stock. The higher the volume, the more active the stock is. So right here, we are interested in stocks that at least meet 1 million trades a day on average. Okay, so now you look to the volume on the far right here. You click on it one time, it's gonna sort them from the lowest to the highest. You just click on it again, it's gonna be again listed from the highest volume to the lowest. Highest volume or high volume doesn't mean this stock is a good stock. It just means that this stock is an active stock. There is another way of picking a stock. You need to, for instance, a stock that is volatile, meaning that within a short time this stock goes up and down a lot, and because we are short-term investors, now you are making the connection, okay? Because we are short-term investors, we need a stock that we expect it to go up in a very short time so we can sell it and make our $500 a day. So if I buy it today, I wanna expect that in a few hours it's gonna go up, and then I'll sell it and I'll make my $500. If I could do that, that would be the perfect goal that I will achieve in the same day. Okay, if I wait a day or two, that's not bad as well. But we wanna be able to expect that this stock is good enough, and in a very short time it's gonna go up, so we can make our $500. After that, if it falls again, we don't really care. Okay. So here, let's say there are a lot of stocks, and these stocks are all under $2. They have a high volume, so that means they are very active ones. If you are a person that is interested in a certain industry or a sector, that you'll figure out by experience which one that you are comfortable to buy, and which one you feel that you understand more, which one you feel that you can read more about it, and you'll have the curiosity that you can get more involved in the world of that specific industry or sector, and do your trades based on that. And if you are someone that you like to buy anything as long as it meets the criteria that you are setting for your goals, then that's what you need to buy. Then buy anything that will help you to make money, and that is what I suggest. Okay. So let's say you picked this stock. Last time we avoided the CTRM because it's located in Cyprus, but we said because they're well-known companies that outside the United States, especially if they are in Europe or other parts of the world, that they lack to some transparency. Some of them also in China, they're accused of lacking transparency when they report their financial statements. That's why we try to avoid those. But if it's extremely very good opportunity, then we go for it, but we have to be very careful. But let's just exercise a little bit of this homework on this stock. So this stock is CTRM. We found those stocks under $2 right here. Our job is try to find the most active one and the most potential that we're gonna make money. So of course you're gonna look at all those and you're gonna say, oh, I'm gonna now read all these stocks in order for me to know which one is gonna work. No, you will start kind of slow at the beginning, but once you are able to use the techniques of analyzing the financial statements and the data that provided for each stock, then you'll be able, by looking at few things, to know that, okay, I'm interested to continue knowing or learning about this stock, or I'm not interested. So one of the indications for me, and that I suggest that you guys take it in consideration, because they're going to save you a lot of time in order for you to pick which stock is the most important for you, which stock that you can count on or anticipate that you're going to make money from. So one of these indications, I'm going to go and show you what it is. So let's say this CTRM, we want to investigate about this stock. So the page that you go to investigate is marketwatch.com. So you pick the stock from finviz.com and you go to marketwatch.com right here. Then you put the on the search button right here on the top right side, you put the code of this stock, which is CTRM. You see it right here, CTRM. you go to Market Watch and you type CTRM and you click enter. Now CTRM is right in front of you. So if you already know what they do, you know. If you don't, you click on profile right here, and then you read about it. You see what type of business they do. Okay, so they are, I think they were here we knew that they are a marine shipping company, so it's a transportation company. Okay, it's a marine transportation company. So basically they provide transportation services. So you read right here, you see Castor Maritime Inc. It tells you information about it, what they do, what they have as equipment and all that, and when they were founded. Sometimes the time the company was founded matters to you. If they've been in business for a long time, that is kind of less riskier than companies that they just came out, because if they've been managing the business on they've been through a lot of crises and they stayed in business, that means a lot. That means they know what they're doing. If they are new, so they have a higher risk. Like this one is been in business since 2017. They were founded, so that doesn't mean that it's a big thing, but you just keep it in mind that they are new in business. Okay, the second thing that you want to look at, so you go from profile again to overview, and here is the indication that, a quick indication that tell you continuing searching or researching or investigating about this stock or not, is the 52-week range. The 52-week range. That means the price of the stock within a year from now. Within a year, 52 weeks. So this stock was $2.60. It wasn't that high. The lowest 11 cents, they are at 18 cents right now, right? So they are extremely cheap. You can buy 1,000 shares for $180. You can buy 5,000 shares for close to what, $1,000, $900 and change. It's not recommended, of course. So if you want to start with 1,000 shares on this stock, it's been, like I said, the highest 260 within a year. That is not so great, but it's not too bad. The more it is, if it was $4, $5, $7 within a year, that is a great thing. Okay, but right now it's like on the edge. It's okay. It's okay because it's so low right now, and the very low, extremely low price is an indication either that this stock pretty soon is going to be out of business, or they might have something going on and they go up. And we all know, because of the coronavirus, transportations, marine especially, transportation, any kind of transportation, especially the ships, they were out of business because of the coronavirus. Like 80%, 70%. So they got affected pretty well by this crisis. But that might not be the reason why they are their stock price is so low, or why their business is down. So if you see it again, 52 weeks, that's an indication. $2.60, they're low, so it could be on both sides, because it's so low. If it goes to 50 cents, I can make my money and get out of it. It might go bankrupt later. I don't care about that, as long as I successfully traded in, bought the stock, and I sold it and I made money. Okay? The only thing I want to watch out is I don't want it to go out of business the next day when I wake up after buying it. So that is the going concern. So that's why you need, if you decide, okay, I'm interested in the stock, let me see if I can investigate further, then you go to the financials, and here you find their financial statements. So basically you want to look at how much money they're making in their income statement. So you really care about only the income statement and the balance sheet. So an income statement, you want to know how much money they were making. You can see they have two ways. They have the annual and they have the quarterly. Normally you want to look the quarterly. But for stock like this, they haven't been in business for a long time. You might want to look at or any stock, you might just want to get a quick figure to see how much they historically been making. 2 million right here in the whole year, 4 million in 18, 5 million in 2019. If you look at the quarterly, just to see that their revenues, they were trending up. Okay, so now we looked at the quarterly, you will see that we knew that they made almost close to 6 million in 2019, right? So now in 2020, they made 273 and 259 in those 2 quarters, and 279 in the 3rd quarter. They still have 1 quarter to report, because some companies they report 4 times, some companies they report 2 times a year. It depends how they set up when they registered and they went in public as a public company, public corporation with the SEC. So this company most likely they report 3 times, because the last time they reported in 2019 was December. That means here they still have 1 quarter to report. It seems like they made so far with the 3 quarters, they actually had more revenues than before. So actually their business there was not down during the crisis. Actually they worked pretty well. So what is the reason of their low stocks? Why their stock is so low? Let's figure out. Let's see. So we're still investigating. Okay. So you look. We said you look about their revenues. You look at the quarterly figure. You take a quick look at the annual. And then from the revenues, you look at their net income. So from all this stuff that you see, just skip, and just look at their net income right here. So back in 2019, the last 2 quarters, 1 was positive, 1 was negative. You see it, see 639, 259, and then you keep going to 2020. The last 3 quarters, I'm sorry, there is 1 quarter. Back in 2019, 1 quarter was positive, and those 3 they were 2020. So they moved from being positive in 2019, and then here their expenses were, even though they made so much more money in 2019, but so far in each quarter they're actually negative. 259, 144, 580. So they have a spike in the last quarter that they reported. They have a spike to up to 580 million in negative. Okay, so that is their net income. Okay, so you put those in your mind. You write them on a piece of paper. I don't care how you do it, but you try to memorize, to remember that this is what you saw, and then you move to the balance sheet. Now you want to evaluate if this company is at a good standing position. So in the balance sheet, you look at their cash and short-term investment. Just quick look. Okay, historically you see what they have. 17, 18, 19, they were going trending up to 4 million and change. Quarterly, let's see what they have. The last quarter they reported 37 million, which is more than ever before. Okay, so let's look the second one. So the first one, you look at cash and short-term investments, and then you skip all the rest until you see total current assets, because total current assets means everything: their cash, the short-term investment, their finished goods, if they are production company, whatever assets they can turn into cash in a very short time. It could be account receivable and all that. So you look at the total current assets, or you can name it TCA. So next time when we say TCA, it's the total current assets. We don't have to say it again, but I'll keep reminding you. So 6 million, 14, 32, and the last quarter 40 million. So they're trending up, $40 million of total current assets. Okay, let's make this a smaller. Let's look the second one. You look is the third one. You look is the total assets. So that means their fixed assets and their current assets. Total assets. The fixed asset is the stuff that you cannot turn into cash in a short time. Since they are a marine company that do transportation, so they can have ships or vessels, and those are very difficult if they decide to sell them in order to meet some short-term debt, or if they want to provide some funds for any kind of investment, it's a lot more difficult than you know, the one that we call them current assets, the current assets, the one that you can turn into cash very quickly, like account receivable. You can go to your people that they owe you money, and they collect your money from them. So the fixed assets is buildings, it's any kind of equipment that it's it takes like a longer time for you to sell in order for you to provide some cash to support your operations or investment, or you know, just satisfy some debts that you owe to your creditors. So total current assets, historically, like on a course, they were 30, 39, 57, and they went up to 73. So far, this company, it shows like a good financial standing based on reading only see how much money they have. Their trend is the most important. They're trending up as far as revenues, they're selling, they're growing. The only thing that is trending down is their net income. It's going down because of their expenses. So their expenses went up, and their net income is trending down. But their current assets is going up, and their total assets, which is mixed of the fixed and the current, is trending up. So they have, we said, current assets total of 40 million. And total assets 73 million. That means they have about 33 million in fixed assets. So let's see now, how do we tell now they are actually in a good financial standing? We want to look at their liability. So how much liability they have. So again, just like we looked at the total current assets, we want to look at the total current liability. So they were at 298, 11, 8, 9.29. So they reported in the last quarter that they reported 9.29 million in total current liability right here. So they are trending just normal, no increase, no serious increase. And they have 40 million of total current assets. What that tell us that these people, they have enough money to satisfy any short-term debt. So here we are killing the fear of running out of business in a short time, and we are short-term investors. So if we decide to buy this stock, we know that we're not going to wake up the next day and see this stock out of business. So we answered the question of the going concern. Let's just, to be on the safe side, be 100% accurate, look at their total liability, because that includes the long-term debt. So they might have very little of a short-term, but they might have a lot of debts, long-term debts. So let's see if that is true. 17 million right here. You see it on the screen. 17, 24, 20 million. So remember, they had 33 million in assets, fixed assets. They had 40 million in current assets, total current assets. Total of only their current assets can satisfy their long-term debt, which is not gonna be due under a long time. So now we are 100%, we answered the question of going concern. So if we decide to buy this stock, this is a good stock. It's not going to be running out of business the next day. Not a good stock to buy yet, but I'm saying if we decide to buy it, we answered the question that it's not going to be out of business the next day. So now we can look at their equity ratio, which shows you how much equity you have. It's just you divide total shareholders' equity on total assets, and then you come up of the percentage, meaning, or you can just divide their total current, their total liability on their total assets, and you know how much you can just yes. So here you have 43%, 39%, 64%, and the last quarter they reported they have 71%. So if you divide just their total liability and their total assets, you know in percentage how much debt they have, and then you minus that from the 100%, you come up with the percentage of the equity. Don't worry about that. You can just look at the figure right here, and then you'll see that they have 71% of equity, or you can read it by number. You see their total equity, which is the total assets minus their total liability, and you'll see that they have 53 million here of equity. Okay, so if they want to borrow more money, they can borrow more money. Okay, so that is, we didn't answer yet the question of if we have to buy it or not. Okay, we just answered the question of we knew that this company is financially stable, at least for a short time, for a short period of time, because we are short investors and that's what we care about. Now you want to see if this stock is volatile. Is the price going up and down in a very short time? A lot. Let's say it's going up 30%, 40%, 50%. How many times within a certain period of time? And that's when you use this graph right here that you see. You're gonna use it. You see it's set on 1 day. If you wanna look at 5 days, you know the trend. You see that the trend right here, it moved from 17 cent to how much? To 22 cents. So it went up 5 cents. And here it moved, that's all within a 5 day, to 23 cents. So the highest 23 cents. You just kind of seen the trend of the stock. It looks like in the last 5 days, the trend is up. So it went to 23, then it fall again to 19, but it was at 17. But also it was before at 20, it went to 17, then it went up to 23 then. But that's not a lot of money for us. 5 cents doesn't do a lot. It only do $5. So let's say within 6 months, what was the situation? So we can see here that it was at 24 cents, it is 17 cents at the end. Here it is 15. So within 6 months we had only 20. So from the current price to where it was, 34 cents, 18 to 34. And it really didn't move a lot. So it looks like that will get us a cold feed. It tells us that this stock is not that volatile. So if you put your money in it, you might wait a little bit, but here is the trick over here. Since this costs only $200 or $170. So if you have $2,000 and you feel that, now since they're coming with the vaccine and then there is a new president in the United States, you have to take in consideration everything. What's going on in the political environment, what's going on in the social environment, what's going on in the business environment. So you have to take in consideration everything. If you are a curious person, you kind of you will have a feel of that everything can affect the business and the worldwide. Okay, so if there are hopes spreading out because of a new president in the United States, that might actually affect a lot of businesses. But these hopes you cannot of course rely on it, because it's not a financial data that it tells you exactly, oh yeah, that's gonna help this specific stock go up. It just helps you to kind of feel what is the environment, the atmosphere that is surrounded all the businesses, the stock market. If there is there optimism going on for the future, or is there no? Some people they're saying we might get into a crisis or whatever. Don't count on that a lot. Just kind of you feel. You should have a feeling of what's going on a political level, on a social level, and so on. But what we need here, we saw that this stock is not volatile, so it might take a little bit of time in order for it to go up, if it's going to go up. We know in a short period of time, this stock is still under good financial standing if this financial data is accurate. Again, we said this stock in Cyprus. How transparent this company? It's a new company in 2017. They haven't been in business, so they could be, this financial data might be not that accurate. There might, if there is a fraud or anything like that, we don't know. There is no way to know. It's just that we know that being a new in business, not a long time, 3 years, that is a risk increase factor. And the financial data is good, but we don't know how much accurate because the fact that it's located in Cyprus. Even if it's located in the United States, the companies commit fraud and they could report, fraud. They could report financial data, like wrong financial data that doesn't really reflect the financial standing, the exact financial standing of the company. But if we want to take this in consideration, we can say in a short period of time, this stock is not going to go out of business. It's a small investment, $170, $200, but we don't know how much you're going to wait for it. So it's up to you. Since it is $2.60, not volatile, I myself won't invest in it, until I see, maybe I'll put it on my watch list until I see like better signs, that will tell me now it's time. It might go up 40, 50 cents, that might help. Other than that, I wouldn't invest in it. I'll just keep it on my watch list because of their good financial standing. Okay, so I want to appreciate you watching this video. So please go back, for people that didn't see the first 2 videos or 3 videos, go back and watch those videos and try to have a feeling so you know where we're coming from when we talk about these strategies, these tools, and how do we do the financial, how do we read these financial statements. We're gonna cover more of these subjects in the next upcoming videos. So just stay tuned to our channel so we can investigate, or we can research more companies, and we can get our hands on more professionally in reading the financial statements and finding the connections between this data in order for us to figure the trend of this stock, whether it's going up or down. Okay, thank you for watching. Please subscribe so we can reach 1,000 subscribers, and then from there on we can go live. We can buy stocks. We can first find a stock, read about it, make a decision, buy it, sell it, and make money. Thank you so much and have a blessed day.